And during that time, a deal was set between the US government and the Japanese government to be able to make the Japanese government become a function of the US dollar, which means they were actually forced by the US government, almost in reparations for World War II, to be able to keep their currency value low. Because if you remember, during the 80s, the Japanese yen was an extremely strong currency. The Japanese were buying all the buildings in New York. I remember that in the 80s when I first started in the business. The Paris Accord pushed that away. The Americans didn't want the Japanese to own the world. They didn't want them to own our real estate. So what they did is they artificially made the Japanese yen weaker. And that, by the way, has cost them the last 30 years of growth. It's because they made a bad deal with the US. But something is occurring now. Japanese people save beyond any other people. They save more money next to the Chinese. They save their money by buying bonds. They cannot buy their own bonds because they give them no yield. So they sell their currencies to buy other countries' currencies like ours and buy our bonds. Over time, this is unsustainable. What I expect to happen is at some point, Japanese bank, the central bank, is going to be forced to raise their rates, which will make their currency get much stronger. So therefore, the best trade would be to buy the Japanese yen, in other words, it's going to as a currency, and to buy and sell their bonds. Sorry, buy their currency, but sell Japanese bonds. And that we already noticed, because if you look at a Japanese bond chart, and I think I got one around here somewhere, if I can find it, let me look in a second. If we saw this, and here's the crux of the argument. If all of a sudden, and this is what they called me about, if the Japanese yen, the Japanese bond is allowed to float, the rates there will go up, and the Japanese who have bond holdings all around the world will sell them. They will sell their US bonds, they will sell their Euro bonds, they will sell their Brazilian bonds, they will sell their Chinese bonds globally. They have literally 45 trillion US outside their country in bonds. If that occurs, our bond markets, along with the rest of the world, are going to go way down in price because they'll be selling our bonds. If they do that, that could be the straw that breaks the camel's back. The one that allows our bonds to go way lower, in other words, lower in price and higher in yield, forcing our US stock market to literally crater. That, I feel, could be the panic event. So everybody, I will be keeping an eye on that on everybody's behalf. And that will, by the way, signal, at least not mathematically, but at least in our minds, a potential entry point into the US stock market. So that is a trade. Now, I will formulate something inside of our portfolios to take advantage of a situation like that and create that as a smart folio on the platform. There's no hurry to this. This kind of thing takes time. But how much time? I'm thinking it could take 3 to 6 months for some of this to get a foothold. But there is no way, it might take a year, but there's no way over time that this is sustainable for what used to be the third largest economy in the world. So now we are looking at a case that directly affects our markets coming from outside the country. It's not our sadly poor leadership in our country. It's not our rising rates. It's an exogenous threat coming from Japan. And that's the one that I think will take a lot of people off guard. We know about it because I'm alerted to it. We all see it, but I want that to be on everybody's radar, because if you do anything outside of flip, in terms of the trading world, this would be something I'd keep my eye on. This is something that can make a lot of money, especially if you're involved in the futures markets or things like that, which most of you I know are not. But it's my job kind of to, on the AI circle, is to purport my ideas of what could cause this. So I used a list of reasons earlier in the year. We caught the market on the right direction. It's going down. We all like the fact that it's going down. We will buy this market cheaper. We will not buy this market today. There is no bottom that I can see in sight until this problem is resolved. This problem coming out of Japan must resolve itself for the US markets and worldwide markets to prosper. So this is a new item that tells me that the US markets and the worldwide markets have headwinds, serious headwinds coming up that they haven't even priced in at all yet. They have not priced this in. Look, most of this occurred literally in the last couple of months. Look, this is end of March. And now we're just at the end of June. I mean, so we have what? April, May, and June. 3 months has caused this. That's how volatile and changing the situation is. And honestly, if we look at any individual chart, there's no math I can pull out or even anticipate that tells me these markets that are just making lower lows, lower highs is going up. This is a market that is in deep trouble. The NASDAQ, by the way, is getting very close to the area where it can literally return to its pre-COVID highs. We're only a heartbeat away from that, literally another 10%. And the NASDAQ will have given away all of its gains from pre-COVID. That is, if anybody can chime in and ask questions about that, let me know, because that's where I feel the market is going. A minimum to here on the NASDAQ and the S&P, something similar. By the way, let's real quickly switch over to Bitcoin. Now this market, I gotta tighten it up a bit, but let's get rid of some of this. This is because we had pricing that literally there would be a trade in Bitcoin that was way off, but it occurred for many days. It just occurred. All it takes is one trade. It creates this crazy stuff. But let's look at this. Here's Bitcoin. Now, I think maybe some of you have probably heard that Bitcoin is a couple of large Bitcoin hedge funds, crypto hedge funds have gone, literally are being dissolved. They've lost 50% or more. So therefore, they'll never be able to come back. And what's going to happen is they're being dissolved, literally by the banks and the ownerships of Bitcoin. Generally, when I see something like that, that tells me this is kind of the end of the Bitcoin market. In other words, I still feel good about the coin in general, but generally when I see events like that, those are the things that create a contrarian view that the market might rebound. So that's kind of what I think could happen in here. Bitcoin is at an extremely low point right now, and I think everybody would agree. I'm trying to zoom this out a bit without getting the bad data or the bad data.
Yeah, Kelly, for trading view, just uncheck the auto. Yeah.
Yep.
Uncheck that. Yeah, and then you should be able to zoom.
Yeah, there we go. Thank you, Aaron.
Yep.
Thank you. There we go. And now I'm going to tighten it up here. So we saw that these were the highs, 67,000 area. By the way, these are Bollinger Bands. This is just a simple 200-day moving average, just something to look at it with. And generally, we all kind of understand generally how this works. When these things are above 2 Bollinger Bands, we kind of want to be out, but not necessarily, because that shows strength. And below, we want to be out because it shows weakness, and we are. But this is a market that I feel has done most of its selling. I feel that this market here is getting closer to an area we want to start examining it deeper. So let's go back to the COVID pricing. let's do that. So thank you, Aaron, for reminding me. Take a look. Here is the COVID pricing. Here's where we are now. Let's get the rest of that COVID there. There we go. COVID pricing here. If you think about it, the pre-COVID levels were about 10,000. I'm kind of thinking that if we see a sharp dip in Bitcoin to around 15,000 area, somewhere in the middle of that, that would be the entry point. And we would like to see that occur at some time within the next 3 to 6 months. That would be, I think, a signal to look to buy it somewhere between 15,000 and 10,000, because there's a lot of pre-support prior to COVID, after COVID, literally at the 10,000 area. If it should go to 10,000, that means we started at basically almost 70,000. We got down to 10,000. I don't need to tell you what kind of a decline that is outside of massive 6 sevenths. So every seventh is 14, 6 times 14, it's 84% correction. Wow. So, but the thing is, in a market like this, given its still basic correlation to the S&P 500, if I feel the S&P 500 can go lower, Bitcoin also could go lower by a factor. In other words, it'll be maybe 2 times lower per point. In other words, a beta of 2. So everybody out there, recognize, I'll finish with this before we do some Q&A. Recognize the markets have only become worse as we've talked over these various 3, 4, or 5 months. They've become worse, not better. They're going down. Most of you have most of your money in cash. That's good. Quite the problem is it's going to probably last at least another 3 months, as I've said many times before, into the end of the summer and the beginning, literally into the beginning of the 4th quarter, which is literally just 3 months away. We're 1 day away from the third quarter. We still have another 3 months to go. I think we're happily waiting on the sidelines. We should be. And knowing that if we can pick up stocks at lower prices, I can tell you the next 5 years after this is something that will make a lot of people happy. We are looking at a not a 2008 situation, but we are looking at a situation that I think has legs to the downside, but can offer over the next 5 to 10 years enormous buying opportunities, where if we can get long there and hold on, which we will, I think we will make an enormous amount of money if we can just remain patient and let the market tell us when we should buy. And none of these little piddly rallies that we've seen, the 800-point rally, for example, we saw in the S&P, what was it earlier? Was it last Friday? This rally we had right here, was it last Friday? This was an 800-point rally. This one right here. You see it, folks? Look what happened. We lost 500 just yesterday. And look, it wiped out the entire 800-point rally almost. It's like when you see things like this, where $500 down days essentially wipe out $800 rallies, it tells you the market is in deep trouble. We are stone's throw away from new lows. And if anybody can chime in and give me something optimistic to look at, I will be the first to examine it. Now, let me just finish with this. The AI portion of what we do, just remember what all AI is. It's mathematics. Mathematics that is examining the data you see right here on the screen, open highs and lows of not just this S&P chart, but many of the other charts you see here, like the bond market, the 2-year note, the Fed funds rate. Those are things that we know prices of, but is also looking at everything from credit card debt to interest rate swaps to to M2, which is the money supply. It's looking at a lot of fundamental data that we get generally once a month or even just once a quarter. It's the aggregation and mathematics around all of these data streams that make a decision whether to be in or out of the market. So the math has nothing from any of the fundamental data, not just this price data that we see in front of us. There's nothing fundamental that also that I can see that supports buying the market. And I'm at least happy to report that the AI has done what it's supposed to do. It got us out a long time ago, and we haven't had to be too frightened as these markets have these 500 point, 800 points, 1,000 point down days, always followed with these sharp little rallies that are just sold. Remember that? I remember this sharp little rally. Look what happened. Literally, look what could happen in literally 3 days. 3 days, it gave away 2 weeks of up. In 3 days, it gave it away.
That was the end of May, right?
It's the end of May. Sorry, in the middle of it. The end of May is when it started, right in the beginning of June, and it just hammered down.
You get those fake outs sometimes at the end of the month because of institutional manipulation and
that is what happened, Aaron. You're right. Because at the end of the month, maybe mutual funds are still accumulating money. So they bought into it knowing they got to put their cash into work. And then right here, literally T-2 days here, this day here, they started to sell it.
Mm-hmm.
So they meaning mutual funds. By the way, the word they in the markets means mutual funds.
Yeah.
That's how that works. It's rebalancing. And mutual funds still represent about $28 trillion of assets. Now, we don't believe in them, but because they're poorly managed. But generally, it's when they means equals mutual funds. It's not that they're manipulating the market. These are just, frankly, stupid programs that take their cash and put it to work without thinking they can time the market.
Mm-hmm.
I think we've kind of found that that's untrue. Yep. So on that, I've blabbered and blubbered for 35 minutes. So forgive me for my monotone and my soliloquy, but if anybody has any questions, I'm happy to take them.
We love it, Kelly. We wouldn't be continuing to show up here every month if we didn't find that it was very informative and educational. We do have a couple of questions coming in. Guys, just enter your questions into the chat or the Q&A box, whichever one floats your boat. I'm going to spend a minute on a little bit of housekeeping, and then we will get to your questions right away. Okay, so the housekeeping element that I do want to talk about is that we are transitioning out of this Zoom environment into more of a public social media, Facebook, YouTube environment. Slowly but surely, we're spreading, we're enhancing our social media presence. So we're going live on YouTube, and the plan is to have Facebook on there as well. So it's dealer's choice, like whichever social media platform you like is where you can find us live. So we won't soon, maybe not the next one, maybe not the July webinar one, but soon we will not be offering the Zoom registration link anymore. So get used to seeing us on YouTube. I'm going to put the YouTube link right here, right now. You can see this is our live stream right now. I'm putting it in the Zoom chat. You can click that. If you haven't already done so, like and subscribe to our YouTube channel, and make sure notifications are on so that whenever we go live, which in the future might be more often than this once a month webinar thing, whenever we're live, you get notified immediately, and you don't have to necessarily tune in. You can catch up. You can show up 30 minutes late or something and watch the video from the beginning. That's the advantage of streaming on YouTube. In addition, one more piece is I believe, I'm going to tentatively say right now that the cutoff point is going to probably be the October live AI Circle webinar, because Kelly and I and the whole iFlip team, we're hosting a live event. In case you may have heard about it, We haven't made a huge announcement yet. We're still in the planning phases, but there is a live event, the first ever live event, right? Isn't that cool? For the first ever live event hosted by iFlip in Dallas, Texas. And oh, excuse me, sorry, I put it in the I put the link in host and panelists, not to everyone. My bad. Sorry, I just resent that out there. Sorry. First ever live event in October, everybody. Hosted by iFlip in Dallas, October 20th and 21st. It's a 2-day event. Mark your calendars, save the dates. We'll be making an official announcement, offering tickets to the event and all that kind of stuff very, very soon, right in the beginning of July, right after the holidays. So mark your calendars, save the date. That event actually coincides with our typical AI Circle schedule. So we will be doing a live AI Circle from Dallas at a live event. So it's going to be different than this Zoom. And so there won't be any Zoom for you to sign up for, right? So that's going to be the cutoff date, right? So up until that point, we'll slowly transition out, but that's going to be your cutoff. Hopefully we get to see a bunch of you there live. That would be so cool to hang out with you. But other than that, you're going to have to find us on social media, YouTube, Facebook, one of the other platforms. Okay. Will the event be live streamed? It will not be live streamed. We are intentionally not streaming that. But the AI Circle portion of it will be live streamed. The event itself isn't going to be live streamed. Okay. Let's see. Let's scroll back up here and get to some questions. I think we had, just going to go with the question and answer questions first. So first, we have a question from Art Lashbrook. I still have money invested in this. Go ahead.
I said, hi, Art.
Oh, hi, Art. Oh, sorry. I still have money invested in the stock market elsewhere managed by another company. They promote a hold strategy and a tax harvesting and say it's not possible to time the market. How ironic. We just released a blog post about this earlier today. Also, a 401k with limited selections. Do you suggest getting out in spite of the tax hits and their strategy of holding? Well, we can't exactly give advice and answer that directly. But Kelly, do you have comments about the overall sentiment on the myth of can't time the market, the hold strategy, and tax harvesting?
And also remember, these are opinions on this, so I can give you my opinion and thought. Mm-hmm. It's up to you, Art, to execute it. Look, Wall Street have for years trained their advisors through the way an advisor or a broker-dealer is trained. They have to take a test, Series 65, Series 64, Series 7, Series 3, Series 24. There's all kinds of licenses you get. And the main thing when you are getting these licenses is they're put out by the federal government to say you are an authority now, you've passed your test, and you can be a certified financial planner, you can be a broker-dealer, you can receive commissions. But the one thing they also tell you to do for almost at every firm I've ever been at is they try to make sure that their constituents, their retail client base, is told that the market cannot be timed and that it just goes up over time. So I can tell you, I have worked for people in my life that timed the market for over 30 years, and they are billionaires. They're not billionaires because they invested over 30 years and rode markets down 30, 50% when they happened to correct that much. When those markets went down, these particular people timed it and made money during those times. So when the market corrected, they just made more money. That's what they do. Market absolutely can be timed. That is a myth. It is probably the biggest myth out there that the market cannot be timed. I see Ken Fisher thinking he calls one of the 10 blunders that you think you can time the market. He's wrong. Yes, he's a millionaire because he's collected a lot of money from people over the years that bought into that myth and him perpetuating it and continuing the myth. So I have a completely different feeling. Yes, I am not Warren Buffett. I am not Ken Fisher, but I can tell you both of them are wrong. because I know very wealthy people, wealthier than at least Ken Fisher, that have absolutely done a great job in the market for literally 30, 40 years. I've been around to see them at 25 of my years, and they made money hand over fist by timing the market. So in regards to your 401k, 401ks are retirement money. If your 401k can be placed into something that is more safe, more cash orientated, I would do it. There is a lot more room, Art, for this market to go lower and for anybody to go lower. Putting your money and moving it in your 401k, if possible, to a different kind of product, which is often possible inside a 401k, would be a wise move, even now. So for example, the 401k that I had at various banks that I worked at allowed me some choices. I could go with an S&P 500 strategy, a 60-40 bond stock portfolio strategy. I could go into bonds only strategy. I can go into cash management. So I wasn't given a lot of choices, but I was given some. This is a time for cash management. So cash management is something that basically holds your money in what they call something is called overnight repo. That's basically the banks lending to each other to be able to satisfy how much money they have on reserve so they don't have to go to the discount window. That is called overnight money. You can, if it's possible, check in with whoever the employer is and see if there's a way to resituate your money into something that is more short-term orientated. As much as I don't even like a 2-year note, it is certainly better to have it there. Even if you might lose, you won't lose as much as you would have in the stock market.
Yeah.
So,
all I'll say is until very recently, I've had a 401k owned by, a corporate entity and all that kind of stuff. And nowadays, the 401k market and marketplace has evolved, right, to offer more choices because people have gotten wiser and asked for and demanded more choices. So usually you'll be able to find some kind of product inside of your 401k that mimics a kind of holding in cash type of movement, right? You just have to find it. They don't make it easy to find, but they do offer that kind of stuff. So a little bit of homework maybe on your end, Art, if you want to pursue that avenue. Okay, let's move on to the next question. Mark Hattus, I hope I'm saying that correctly, asked, is it possible we consolidate over the next months and drop into 2023 rather than continue dropping here?
yes, very likely possible. But keep in mind, again, if we go back to this, again, if we look at individual stocks, here's Apple. Yes, I mean, it will consolidate like this, literally 10 days or so at a time. And markets never go straight down. They back and fill. Right now, you can see this is Apple, back and fill. But it's not, it doesn't look like Apple's falling apart. It's not. Look at it relative to its pre-COVID level here. Mm-hmm. It's still literally 50% higher than, or a little more than 50% higher than its pre-COVID level. I suspect that the markets will consolidate for periods on end, and then make new lows, come back up and consolidate, and then make new back lows. It'll look a lot like what we're seeing here. I mean, but take a look at the damage. So again, it will not go straight down from here. It will back and fill over time, over the next 3 months, literally, I think, into the elections. Here's Amazon doing the same thing. But when the year started, it made a huge move down. But you could say that it's consolidating here. But folks, take a look. It's at the pre-COVID price. Mm-hmm. It actually dropped down into COVID pricing in here. These are pre-COVID. So this market, this Amazon has already given up all of its COVID gains.
Right.
Companies like Apple just haven't given up the ghost yet. When you see Apple give up the ghost and go, I suspect Apple's going to about $80 a share. If it goes to $80 a share, you know that that's going to do a huge damage to the stock market. It's just a matter of time. Remember, everybody, another thing, the earnings aren't even out yet. They're going to come out in the next quarter. And when those earnings start to come out and everything is revised lower, watch what the stock market does. It's going down. It's not going to go down every day. We're going to have a lot of these sharp rallies like we had last Friday, 800 points up. But guess what? That's just a selling opportunity.
Yeah.
And show people that I put on futures right here.
Speaking of Amazon, I feel like, Kelly, I don't know how you feel about Amazon, but when you brought it up, that just triggered a thought for me that I noticed that it did hit the pre-COVID prices, but I think the sentiment in general is still heavily bullish on on Amazon because of the massive split that they had. So I think the perception is that like, oh, well, it's so cheap, I can get it. It's still a good fundamental stock to own. Let me buy it at $100.
I remember a pundit coming on everybody and saying, oh, the Amazon Web Services, that part is a gold mine for Amazon. And they were trying to buy it in, they were saying, what a great deal it is over here at 139. Right? Well, now, hey, if it's a good deal there, I think those same people, are they buying it at 108? My guess is they're not, because they just got handed a 30% loss.
Right.
They don't understand it. And so now they're quiet. Now I don't hear those people anymore.
Exactly.
And there'll be some people that will come on here and then they will be quiet when it goes down here.
Right.
You just don't realize what they're in front of. And a lot of it, everybody, just a heads up, it's maybe because I'm older. I've seen this before. This doesn't play out good. There is no happy ending here for the market. It is going lower. And I'm just nervous about one thing, that I'm so confident it's going lower that I got to almost be a contrarian to myself. So the thing I stand behind is the math will let me know. It's like right now, more than ever, I rely on the math because I'm bearish. I think I have a reason to be bearish. Everything in my database, in my mind's database, tells me we should not be participating in this market. It will tell us when to buy.
Got it. Okay, let's move on to the next question. I think this is a quick and easy one, Kelly. What determines the eligibility for a stock, individual stock or ETF to be eligible for our AI?
Oh, data. So two things. Look, data that we feed stocks is that matters is the fundamental data we feed stocks. A lot of it's there, like interest rate data, credit card data, stuff like that. But the other data we of course need from the stocks themselves is, for example, their earnings data. I also look at free cash flow data. If I don't have a lot of it, remember, free cash flow is something that gets reported quarterly for publicly traded companies. So we see their balance sheet and peek at that every quarter, which means for every year in business, I have 4 data points. If the company has only been around like 10 years, I have 40 data points. Look at Facebook, for example, 10, 12 years. We don't have a lot of data points to be able to say that this is accurate information for my AI to use. That's why we stick with S&P 500 companies that have been around at least 20 years for the most part. And so 20 years, now I have 80 data points on fundamental data, plus I have all the price data for 20 years. I don't need 20 years of price data, but I need fundamental data that is enough data points to be able to say, hey, I can have an accurate sample. Bottom line is, if I flip a coin, how do I know a coin is fair if I flip it, 4 times?
Right.
It could easily be heads 4 times.
Right. Mostly the simple version of it in layman's terms, the way that I understand it, is that we need a long history, aka data, right? So one of the reasons, if you look at the crypto coins that we've chosen to apply our AI to, we don't apply it to Dogecoin or Shiba or whatever those coins are. We apply it to the oldest coins: Bitcoin, Litecoin, Bitcoin Cash, Ethereum, like the ones that have lots of data. So that's typically the big domino for what qualifies an equity, a stock, or crypto or whatever for AI. Okay.
Excellent, Aaron. Better than me.
Well, you know, I have my moments. Well, moving on, could you please shed some light on MasterCard and Meta, previously known as Facebook? Should I expect the AI algorithm will sell it when it sees fit? Thanks.
Let me see if
That comes from Jonathan.
coming out there, they're going to go to Meta. Well, let me work with MasterCard. So I'll work with MasterCard. Facebook, by the way, Meta, is something I'm starting to like a lot more because it's been so heavily damaged. But again, when the market's generally going down and earnings are going to come out and they're going to be forecasted lower, I still want to just stay away from things, but those are more of the things I'm willing to look at. What Facebook, Meta, mostly because it's lost so much value. And I do feel that it is, regardless of our feelings towards, we might have towards Mark Zuckerberg or Facebook's ethicalness, then I still feel that the company is going to be a part of our culture in the years to come. So that's something that I would buy when we start to get some kind of forming bottom, which means much higher volatility than we have now. So that's one. MasterCard, Visa, these kind of companies are the companies that will hold up best, as you can see. Why? Because people still have to purchase and they have purchasing power still. The only issue with this kind of a stock and or Visa is when their purchases dry up because their money is gone. Remember, purchases are a function of perceived wealth. The perceived wealth in this country, even though the stock market has gone down and lost many trillions of dollars of value, the perceived amount of wealth in this country is very high because people literally, I feel, associate their wealth with the money and equity they have in their home. And they look at their home as sort of a bank that they could borrow against, and they do.
The American dream.
It is not just the American dream. If you just look at why the M2 money supplies have remained high, it's because the monies that are being used are coming out of people's savings, their homes, and their stock accounts. Even though their stocks have gone down, they have made so much that a 20% kind of correction on some of these stocks is not a big deal when you made 200%. So that perceived wealth. In other words, at the end of the day, they're still consuming because they still have wealth. M1 is high, M2 is steady. So therefore, I feel these stocks will be the last to go. In other words, they will hold out in the short run. But I also suspect towards the end of the third quarter, as data becomes more negative, they will drift lower. But they will only drift low. So I don't feel that these are susceptible to bigger downside move. Just keep a note, look at the COVID. These are still at basically, they never rallied beyond the pre-COVID highs. They came above the pre-COVID highs and they stayed there. So they haven't done what, for example, Apple has done. MasterCard is not Apple.
Right.
So,
okay.
And if we look at real quickly, Visa, same thing.
Okay.
Same kind of thing.
Jonathan, I hope that answers your question. If you have any more, as always, if all of you have further follow-up questions, feel free to email us or leave a comment on our YouTube channel. That's the way we're going to handle that from now on. Leave a comment on our YouTube video or email us at support@iflipinvest.com. A couple of people, Kelly, have asked, how do we get in on this yen opportunity?
I'll send out something, I think, as an opinion, which I'm allowed to do. I can't give advice, but I can create an opinion. I'm trying to look at that myself, everybody. I mean, I could tell you the main way I would do it would be off the bat, would be to short the Japanese government bond, which is called the JGB. Now, there was one way I've used to do it in the past, and that's through JGB futures. However, it's an enormous contract. It's very expensive. It's a $757,000 bond. In other words, it's a huge contract in futures. I'm going to look for another way, like if they have E-mini bond or E-mini, some kind of mini JGB futures, that would be the way I would go about it. Remember, the other way to go about it is to literally at some point buy the Japanese yen. But I'm more, the bigger and I think safer bet is to sell JGB futures. So that's the first way to do it, the best way. But that takes a large futures account to do. Let me look at that and see if I can put something together to those few people that might be interested. Maybe if someone mentions they might be interested, send an email. Aaron, is there a way to collect an email from people that are interested in that trade? And then we can send out information. I don't know.
I'll say, connect with us on social media, on our Facebook page, either or leave a comment on the YouTube page, and my team will get.
How about if I do this? Look, I'm looking to do it too. I have a futures account, everybody. I'm looking to do it myself. And if I do it, I'll tell you the trade I put out.
Okay, great.
And how about that? Because even myself, I don't want to take a JGB future because the contract is just so enormous.
It's huge.
It's dangerous, and it could wipe you out quick. This is something where you gotta.
They don't have micros for that, I don't believe.
Yeah, exactly. Yeah. But I think that's actually that might be the trade of the decade.
The biggest caveat to this is I think this is the first time that we're actually having this kind of a discussion. So bears mentioning this is a futures market conversation. So we moved on a little bit away from stock markets and crypto, which is where 99.99% of our conversation has been so far. But it's just in this crazy time, you got to take a step back and look at the macro perspective and look at currencies and futures as well. That's not really our specialty here. It's not really the main topic of conversation. So if it's above your heads, then it's okay.
Yeah.
That's okay. Kelly, you had a final thought?
I'll have a final thought. Let me see. There might be some instruments that I don't look at that are within our universe that we might be able to use as proxies. So again, I'm looking at it. It's only become deeply to my attention over the last, maybe month and a half. And so, but I mean, again, when we look at that future, real quick before we leave, remember this is all occurred. I started to learn about it here. Mm-hmm. And it's only been like a month and a half since this has happened.
Right.
So the people that I know got involved in this area and they've already obviously prospered in it. So it's new to me. Let me look. And you're right, Aaron. This is outside of what Flip does. This is pure advice. And again, we don't give advice, but it doesn't mean that we can't create news around what we think is the right trade for those people that are very aggressive. For most people on our platform, I only look at this and point this out so that they can understand why cash is still the best position and maybe becoming even a better position as time is passing. This is opportunistic for those that can set up accounts and work into futures markets in particular. Let me see if I can find some proxy. And I'll try to post it somewhere.
And by the way, this bears mentioning again, but so similar situation with the several folks who have asked questions on commodities like corn and wheat. A lot of usually your exposure to those kinds of markets is going to come from futures instruments usually. So this is the kind of conversation, guys, that we're going to have way more in depth at the Dallas event. We're going to have futures experts there. It's going to be a multi-speaker event. So if this kind of thing interests you, if this is a little bit over your head right now, but you're excited to take advantage of the upcoming opportunity that we're forecasting, that event is a really good place to ease yourself into getting educated on this kind of stuff, right? Not just with iFlip, but from other educational trading partners that we have. Correct. Okay. So that takes care of the future, or the commodities on corn and wheat and copper, sugar, oil, all that kind of stuff. Mostly futures market conversation that we won't get into here. Let's move on to the next question. We gotta pick up the pace here a little bit. Let's see. Okay, I'm gonna pause and say hi, Aaron. The delay with the crypto broker has played into our favor. Yes, you're welcome, I guess. I don't know how to feel about that. But yes, it's proven advantageous for all of us. Could you share a quick 30-second update? Well, right now, it's the delay was legal red tape. Let's just sum it up with those words, right? Legal red tape. And we are exploring other options to because how you do one thing is how you do everything, right? And if they're gonna be
I have some color on it. By the way.
okay, yeah, I don't want to.
I'll give you color that I just learned today.
Yeah,
folks, everybody, here's what happened. There's a company that the broker dealer goes through called Paxos.
Right.
If anybody has interactive brokers, Paxos is the way you buy and sell crypto on interactive brokers. The Paxos turned out that they're looking for something that the broker dealer cannot supply. So what we've done is the broker dealer has done to be able to give us crypto is they made a deal with a different group, and we already have the APIs. They are integrating the APIs from Paxos to this new group. And we heard just late last week in another update today that they think that that could be done in a couple of weeks.
Okay.
Which means that we might have a much sooner comeback by using a different vendor. Actually, this vendor will give us some different advantages and maybe one disadvantage. I'll explain that at some point as we offer the platform out.
Yeah.
For example, it'll offer more currencies, more different cryptocurrencies.
I hadn't planned on talking about that here in this one, and I was probably going to save it for the July AI circle.
Yep.
Adam, since you brought it up, I wanted to address it. Maybe a couple of weeks. We are looking at switching vendors is the bottom line because it's just a better fit.
Only a couple more minutes. Let's get a few more.
Yeah, let's move on. We got a couple more questions. Can you comment on oil and red oil specifically? It dropped and it's been rallying back. Do you expect more drops?
I do, because I feel that not drops. I expect the red oil to kind of hang out in this area. Take a look at this, by the way, Exxon, Energy Transfer, and PAA. These are things, for example, and Phillips Petroleum is also in there, I think. And if you look at these things, these are pipelines. There's a weight to these two pipelines, Energy Transfer and All Plains American. That's why they're up here. I keep an eye on them. If you look at these stocks, what they're doing is they're in this holding pattern right now, waiting for some kind of a change in the administration. These stocks, everybody, are paying a dividend. I don't know if you know this, but if you look closely, these are paying 6 to 8% dividends. Even though the current administration is just as it hates these kind of companies because they want to move from fossil fuel to green energy. Bottom line is that's going to take many decades more to go. A new administration will correct this. That means these things could be in the holding pattern to literally to the end of this administration in government, but they're paying 8%. The upside of these stocks, let me tell you, is pre-COVID levels. They're around 23, 27, and even higher if we go back in time. So if we look back, there's a chance that these things can triple. Still, they're not going much lower and they're paying 8%. So red oil, I think, is actually a very good portfolio to be in. Don't look for price appreciation, just look for dividend here, but with the potential that these things can triple in value. So what's wrong with about 7% on these stocks? And they have this huge potential to go higher. So that's red oil. Yeah, I expect them to ebb and flow. I expect oil prices to go down at some point. They might go higher for now, make new highs. But over time, over the next few years, they will have to ultimately go lower. But who knows, as long as the administration is holding on to green policies, it's hard for oil to go down. These things will remain steady. They collect a dividend. I'd hold that portfolio, and I own it too. I'd hold that. Just watch what that can become in the years to come, and watch what it pays you right now.
Awesome. Thanks, Kelly. Last two questions, super quick. Do you think the SPY will go below 265?
Pre-COVID lows, we bought it, I remember, at 245. You see, I can always remember that price right in here.
Okay. And then the next question is,
by the way, I do expect Here's where I expect the S&P. We'll
Okay.
get the last one. I expect the S&P to go to around 300 or less before there's any kind of math that might suggest that the market will go higher. So yes, it is possible for 245, the COVID lows in the S&P 500, literally losing 50%, almost 50%.
Okay. And our last question is, any concerns about holding cash in the money markets?
Yes. Again, money markets are what they call cash management in overnight repo. During the 2008 financial crisis, two huge firms, I can't remember, one of them was the largest cash management company in the country, literally went out of business. And here's another thing, folks, that wasn't FDIC insured. So problem is when we get into these kind of financial crises, anything can happen. Right now, we don't really have a financial crisis. So for now, I think cash management is okay. But again, it's just not paying enough for me to be interested in it yet. However, rates will go up over the coming months where it will start to look better. And as long as there's no technical problem with these markets, the firms that do the cash management should be okay in the short run and probably the long run. But it's just not interesting enough to me yet to be a buyer of symbols such as cash. That's a symbol that represents cash management. That
All right.
It's just not enticing to me. Not for the rate and the possible risk that we never thought would be in those kind of markets. And all of a sudden now I've learned in my life, even that has risk.
Right.
Literally, it's like putting it under the mattress. The only risk you have is somebody stealing it. And now putting it into a cash management, it's the cash management company could become insolvent. So it's not worth it yet. I need to see at least 2% for me to get interested.
Yeah, there's risk either way. The short answer is we got to wait and see, basically. And so thanks for the question, JJ. Please continue to ask about that in further AI Circle webinars. Okay. So that's it for tonight's AI Circle. Everyone, so many great questions today. It was a ton of fun. I know we went a little over, but I felt like it was time well spent, I think. So thank you all for joining us. Again, follow us on YouTube because that's where we're transitioning towards, right? Eventually, this Zoom won't be a thing for you anymore. So follow us there, like and subscribe, follow us, and make sure the notifications are on. With that being said, good evening and good night, everybody. Take care, and we'll see you next time.
Yeah, thank you, everybody. It's been a pleasure for me. Thank you all, and all the very best.
Bye.